Although this year's final trading day is still underway, it's safe to say that US stocks had a tremendous year, within touching distance of being the best year in more than 2 decades. The major reason behind the success was that the US Fed Reserve reversed course and lowered interest rates, and negative rates abroad kept even more money flowing into the US. Let's delve a little deep into the overall performance of 3 major indices in the outgoing year. All the 3 benchmarks climbed by over 20% for the year, but the Nasdaq Composite rallied the most, on track for a 36% gain this year, which would also be its best performance since 2013. The tech-heavy index recorded its longest winning streak since July 2009 last week and climbed above 9,000 points for the first time. The prospect of a truce in the US-China trade war and the probable resolution of Britain's Brexit crisis have helped boost optimism in recent weeks. The other key driver was the Fed's recent decision to pump $500 billion into the repo market, which added more fuel to the market rally and was a kind of backdoor stimulus. The S&P 500 has also been strong over the course of the year, posting a 29% annualized gain, on pace for its best performance since 2013. Among the S&P 500 components, only 57 have had negative returns. The Dow, meanwhile, climbed by 22%, its best performance in 2 years. In a bright spot among US stocks, Apple has gained the whopping 84% this year. Let's examine its stock action in 2019. The year started off dismal for Apple stock when it plunged by 10% on January. The company cut its sales forecast at the time. The stock was down by as much as 39% from its all-time high. For the next 7 months, Apple recovered from those lows to now trade at $291.52 per share. Apple would have provided a nice gain if you bought it right. Speaking of the year's losers, Gap, Macy's and Kohl's were all among the worst performers in 2019. The Gap is now rated as underweight. Its price target stands at $14. The stock has a high of $31.39 for the year, while the low is $15.11. It lost a 30.82% on a yearly basis. Gap reported a 2% decline in revenue and a double-digit decline in EBITDA. Profile margin slid, so the free fall was alarming. Overall, the scenario for 2020 will be for stocks to rise higher as markets firmly believe the Fed will be on hold, credit markets are healthy, the consumer is strong, and some of the key headwinds in 2019 are becoming tailwinds. And this was Weekly Financial Review on Insta TV. See you back in the new year.